Yes, it's sound there. Yes, good evening and welcome to yet another session. Yes, a very good evening to you all, and welcome to yet another session, courtesy of TBS. We have our live classes on Thursday to take us through the different market mechanics. Today, we'll be looking at how to look into these markets using ICT, and our specifics will be being able to understand the bias for the day and then the narrative for entry in the lower time frame. Okay, so basically, one of the most important things is being able to identify where we are most likely to go during that particular day. Shall we be bullish on that day or shall we be bearish so that we can benefit from that particular trend of that particular day? So every single candle is a range. Every single candle is a range. So this is an open, low, high, close. So this is a range high. This is a range low. So every candle is going to have that particular system with itself. So you want to make sure that you benefit from price movement in a certain direction, and that can only be done using the daily bias. So, so if this is the candle high and this is the candle low, we want to make sure that we can tell the price is most likely to buy, so we shall look for any buy opportunities that day, or price is most likely to sell, so we look for more of sell opportunities that particular day. So we want to see how we can identify that for the trades. So I'll be looking specifically onto intraday trading or day trading. That means people open trades that same day and close it the same day. But then the same concept can be used for even swing trading. So if you're a swing trader, all you have to do is carry these concepts to higher time frames and use them that side. So this is a range high. This is a range low. So this is, for example, a 1 hour chart, right? This is an example of a 1 hour chart. Then this is an example of a daily chart. One-hour chart, and then this is an example of a daily chart. So the daily chart is a single candle, but then the 1 hour chart is a fractal move. Price is moving from here down, then up, then close. So open in the 1 hour chart, drop down. So here we open from around open should be around here. So price opens from here, which is exactly here. Then it drops down to create the low, creating this wick, then it pushes up, creating this push higher, and then closing. So we presume that the close was exactly here also. So we want to see how we can benefit from the particular bias of a particular day. So this could be a bullish bias given the fact that price was coming from down. So these are bullish candles, then this is the bullish bias. So we want to see how we can participate from this. Now the concept of being able to participate from this to tell that we are going to buy this particular day, buy this particular day, buy this, buy this, buy this, sell this, buy this, sell this, sell, buy this, sell this, or buy this, avoid such movements here, buy this, sell this. It needs you to understand the concept of two things. One, you should be able to understand that price has to be on a strong zone to buy or should be on a strong zone to also sell. That is support zone or resistance zone. However, we won't be using support and resistance here. We'll be using concepts of liquidity and then PDRAs. So when price sweeps, for example, liquidity, we expect it to rise higher. When it sweeps liquidity of buy side from up, sorry, sells, we expect it to sweep buy side liquidity and sell, and then sell side liquidity and buy. Okay, so that is what we want to look at to consider our buyers. Secondly, one price to sit on an order block, like react on an order block, then buy, or want it to react on an FVG or buy. So we are looking at those concepts. We're going to use FVGs to like support us to go higher, or use order blocks to support us to go higher. These are OBs, support us to go higher. And then also liquidity can be used also, right? Because we said price will always reverse from a liquidity zone, because price looks for liquidity and sits on those strong zones to buy. Okay, so this is what we are going to be using simply. The PDR is here, and then we shall be looking at internal to external liquidity. Start with them. So as you can see how you can trade a particular day. So let's go straight to the charts and see how that will be. So this is, for example, a daily chart. Of course, you will start with the top-down analysis from the higher time frames. So we want to see how we would use the internal to external, or PD arrays like this to buy price, or liquidity zones to buy price, right? Okay, so let's take an example of a prominent trade here. Or we can begin with what is here. So the trend is bullish. Even other, if you check the weekly chart, that's showing us we're in a bullish trend. Okay, so we're in a bullish market here. So we want to make sure the weekly is showing us bullishness and the daily is also rhyming with that. So that both the weekly and the daily are showing us the bullish trend. That's the best case scenarios for the trend to be very good. So let's focus on the daily right now to look for the opportunities. So let us start with an example of this particular day here. If I can replay this, from here. So what happens is price is already showing us a very strong bullish momentum. It's already showing us buys coming in. So that means we want to focus on buying price to the upside more than selling it. We still have liquidity up here, so price is still pushing, and also higher time frames are showing buys. We also have liquidity up here. So now we want to use FVGs, order blocks, and liquidity sweeps to continue the buys upside, and that is what's going to give us the bias. So if we are to use this particular example, we see that this, when price sweeps liquidity, what happens? It always goes back to internal. So when price takes a high, it gets back inside, takes a high, gets back inside the range, takes a high, continues pushing to the upside. So we create a range high, come back inside, find a fair value gap or order block here, sit on it, target these highs again, high like that. Again, come back inside, find a fair value gap or order block, sit on it, again target these highs continuously. That's how we create these ranges. Okay, so that's how we bring the concept of internal to external, internal to external, external, internal, external, internal, external, internal. That's when you keep on moving higher. So it's the same thing with this. External to internal, we take this high, external back to internal. What do we have? We have a fair value gap, external. So now let's take an example of how we'll trade this. So what happens is price takes external liquidity. So this is external liquidity, or I would call it buy side liquidity. Buy side liquidity. So when price takes buy side liquidity in form of highs, we expect it to come back to internal, that is FVGs and order blocks, to support it to continue price higher. So when we mark this and then put this well like this, what is inside here that can hold price to continue going higher? We have a fair value gap. So this fair value gap here is our next area of interest. What else do we have inside here? we have an order block. Okay, so there is an order block in line with the fair value gap, making it even more high probable. There are two strong zones that could hold price from going lower. So this is also an OB. So this is an OB, then this is a fair value gap. So this is an FVG. So this is the center and inside. What happens is, now we want to see how price comes back to mitigate that inside zone. Okay, so when price sweeps liquidity in form of highs, it comes back inside the range, which is to look for FVGs and order blocks to continue pushing higher. So we want to see a situation of price doing something like this to go higher, to continue doing something like this to continue with our uptrend. Okay, so all you're looking for is sweep highs, come back inside, then we get a trade. So when price sweeps this liquidity, you can choose to do two things. One, you can decide to sell this price down here, or you can decide to wait for price to first come down here. Okay, it depends on what kind of trader you are. If you're an aggressive trader, you would sell then buy also at the same time, but want to focus on more especially the buying. Okay, because we want to use mitigating of PDRS to continue pushing price higher. Now I don't have that subscription for the trading view, so it stops us on the daily, so we can't see the 1 hour. But let's just play this. So this is what my interest was. One price to come and mitigate the FVG and the order block. And that is when we are going to start looking for opportunities to come back up. So let me play it so then we go and see how we'll take the entry on the 1 hour. So the daily has finally come and reacted on this zone. Now we want to buy the next day to push back price to the upside. Or this reaction actually began that very day, so we start looking for trades here to buy price higher. So now if you play this, it shows us that price left this zone. So price came from external to internal, looking for fair value gaps, looking for order blocks. Then after reacting there, we now go to the 1 hour chart. What do we look for on the 1 hour chart? On the 1 hour chart, we are looking for something that if you could guess would be very good. It is the market structure shift. This market structure shift is a very important confirmation that price does not want to continue going down here, and these PDRAs or FVGs will hold price. It won't push price lower. Price will respect this zone and continue with the uptrend that we want. So the market structure shift, or what some people call the CISD, or what some people call the choke, depending on the books you've read or maybe the mentorship you've got or the resources you've been able to see. So market structure shift, this is CISD, meaning change in state of delivery. Then choke, to do with what? Change in character, change of character. So all these mean the same thing. So what do we do after price reacting on a strong zone? That is the first criteria. One price, number one, we want price to hit a daily PD array. We just try to keep your trading simple and look for only those quality opportunities. Hit your daily PD array. Then on the 1 hour, you look for a market structure shift, right? Plus, you should then now you can look for entries. Now, one thing about me is I take my entries on the 1 hour. I don't go to the lower time frames. But then if you would prefer to go to the lower time frames, you would want to use the 5-minute chart. That is if you're doing time frame alignment, and that's the right thing to do. From the daily chart to the 1 hour chart to the 5-minute chart for entries. It gives you more precision, and the algorithms are programmed in a way that they have to follow certain sequencing. So if you follow that protocol very well, you won't be able to have that much difficulty. From the daily to the 1 hour to the 5-minute. So now let's take a good look at what happened here. When price finally reacted on our daily PD array, the next thing is we go to the 1 hour chart. Now when I press the 1 hour chart, our replay tool is going to get cancelled because it needs subscription. It stops on the daily chart. So you just bear with me and we'll see how we can just continue. So yeah, it has been cancelled. So what happens is, this is the FVG that we marked, okay, and this is the order block that we marked. So our interest was let price come and react on this fair value gap or react on this order block. Now, after price reacting on this zone, what is our next interest? Our next interest is, now this particular day began from 17, right? The candles begin at 1700 hours. That one you can confirm if you're using the tool. So you can look for 17 is here, and then it closed also at the next hour, which is around 17, or you can put, let's put 17. So between this and this is that particular day when we had that reaction on the order block. I can go back this side. So you can see that this particular black candle is the candle we reacted from. It is marking these candles because price does not stop moving. Immediately this green candle closes, it begins. Immediately this candle closes, this begins. So it's, but we're focusing on this black candle reacting. So in reacted, we're looking for a 1 hour market structure shift to confirm that price is going to continue pushing higher. That's all that we need to see. So price begins to drop and reacts on this zone and fair value gap most especially, and then begins to displace to the upside. And when price begins to displace the upside, what are you looking for? Now, me who trades the 1 hour chart, I won't take any trades within here that much because I want a market structure shift or disrespect of a fair value gap. So my trades are most likely to be on the next day. Why? Because let me give an example. Then I'll also show you the 5-minute entry. Because when price reacts here, the most confirmed shift is close above this, right? Those who use the SMC, this is the high that created the low. So you want price to come, react, then close above, then react, then we buy, right? Yeah. But then I won't need to use that. If you're using CISD or change instead of delivery, you don't need to wait for this high to be taken. You just need to see PD arrays that are down here that are being respected to push price higher for as long as this zone will hold. So when price reacts here and begins pushing higher, what does it leave behind? It leaves behind a fair value gap. This fair value gap here. I'm to mark this fair value gap, mark it here like this. So when price reacts here, it leaves a fair value gap. Now this is an opportunity for an entry. So when price pushes above, price comes back to react here. People pump their orders from this particular zone here and hold price to push the rest of the day. Because we are coming from the high to internal fair value gap, we are looking for more highs up here. So this is where the opportunity for the buys will begin from. Now this happened at a time when they are almost closing that day. So I'm to mark this. This is 17. The next day began from here. So this day closed after reacting here. So you will take your entries from here. From this very fair value gap here. Because price has reacted this fair value gap on the strong zone, so displacement to the upside, a fair value gap made for a new area, fair value gap made, use it to push price to the higher side. So you put your stop loss around at least 15 pips, be on the safer side. And then what do? You target the next buy side liquidity, or if you're trusting more higher prices, the better. So you target these higher prices, then you hold your trade throughout. So price has reacted on the daily zone, criteria met, fair value gap daily zone. A shift has happened, and then a PD array made here for you to continue buying price higher. So those who would prefer to use the 5-minute entry, let me delete here. So you come from the daily chart, react on the FVG. This one is a daily FVG. We start looking for 5-minute market structure shifts. So 5-minute market structure shifts, you go to the 5-minute chart. I'm going to be able to give another example in case there isn't much clarity yet. So here is for those who prefer to use the 5-minute market structure shift. So price in itself reacted on a fair value gap. Okay, do not tap this order block itself, but it reacted on a fair value gap because we had a fair value gap and an order block. So when it reacted here, it started to shift. So what is the shift that everyone else looks for? This high created this low, so we close above this high, it becomes a shift. We retrace back, then we buy. So that is the most popular shift if you're using the 5-minute chart. So you'll see it, price giving you that signature. So where is it? It's here. So this is the high that created the low. So once we are able to close above it, it signifies a market structure shift. So it signifies a market structure shift. So how is the shift confirmed? We say that shift must happen by a body closing above this wick. So this high created this low. We want a body to close above this wick to confirm that this shift has happened. And then we retest inside a PD array. So which PD array is available here? We have those who see breaker blocks. This is a breaker block. And those who see an order block, this is an order block. The last black candle before series of candles came and closed above it. This is an order block for the 5-minute entry trade. So someone marks here the order block, or someone decides to mark this as the breaker block. I don't want to make the chart dirty, so but you can identify. So this is an order breaker block. So order block, breaker block. So this is an order block entry. And then this is the breaker block. The breaker block is a failed order block. These green candles were closed below. Price was supposed to react, then continue dropping lower. But what does price do? To make it more clear, people hear of breaker blocks. A breaker block is a move like this. When price begins to push higher like this, it means that it's creating a green candle, right? It was a down candle, but then it begins to move higher like this. It means a green candle is being made, depending on the color of your chart. If it's a blue, if it's a buy, if it's a blue, if you're using blue and red, that means blue is buys and red is sells. So blue means this move that pushed to the upside, and then when we drop like this, it means that price made a sell, right? Now on making the sell, that means this particular zone should have been used to hold price because we have money here and also money down here. So what they do, they fake people to buy, then they take away these guys who bought, then they come back, and then they, instead of reacting on this zone to continue going down, what do? They break above it. When they break above it, this becomes a breaker block. So you hear the word breaker block, order block. It was once supposed to be an order block, but it was broken above, so it becomes a breaker block. So what you do is you mark this zone, and then you expect price to come back inside it and then push to the upside. That's why these green candles exist, then a down close and a push upside. So those who would prefer to use this breaker block would use it. So you'd mark this like this. For those who would prefer to use the order block, you'd use this. Then you'd pump your price to the upside. So price retraces back, it finds you with maybe limit orders, or you make executions, then you buy price to the upside. Same thing with this. So where would your entry be? Your entry would be, now this is also in the kill zone at 9, because the kill zone of New York is from 8 to those who choose to put at 11 and midday, depending on where you stop from. So your buy program begins from there. At this zone, you target higher prices to continue pushing price higher. So you hold your trade throughout this price action. If you're using the 5-minute chart. And if you prefer to take profits on the same day, still you can take the profits there. So what was the criteria we used? We said one price on the daily chart to react on a strong zone. Then we go to the 1 hour chart, we get a market structure shift. That is a bounce from a strong zone, then an entry. So let's have another example to make it more certain. Another example to make it more certain. Now you want to focus on your setups because not every day is going to be a day for you to take a trade, right? You need to make sure your trade is an alignment with your setup or your trading system, or else you will always find yourself getting issues. So you can see that once price reacts from the internal zone, it displaces to the upside, targeting more buy side liquidity because it is in a bullish market. So you're combining the trend with what is happening. And delete this. So you can see price keeps on doing the same thing to give it a wave. Up, down, up, down, up, down, up, down, like that. Fractal with every time frame. So when price reacts here, it pushes, buys, continues buying. Now there will be those days, for example, what happened GBP USD the whole of this month. Those who prefer to take trades using, for example, order blocks or fair value gaps had a very big challenge. You can see price wasn't giving re-entries, and that happens, and it's very normal. You can't blame your age for that, like your trading system. You can't blame your trading age, like your trading system for that. You realize price does not come back to mitigate an order block or fair value gap, just keeps pumping, pumping, pumping. That doesn't mean that your age has a problem. It means that there's an aggressive delivery in the market already from a stronger zone. So when price comes from a strong zone, which was down here, it just began pumping, then pumping, then pumping to the upside. It happened on GBP USD. If you're a GBP USD trader, you see this price action here? If you are not a swing trader, you're most likely to always have a very big challenge unless you will take continuations, because price came all the way from this fair value gap down here. Almost half the month has been pumping. So from here, you don't see any retracement. It just keeps popping, popping, popping. Then someone becomes worried about the trading age. But no, these market conditions happen, and that's the expansion cycle. So Euro USD, let's give another example, and you see something else again. So now this particular entry on the FVG is complete. You hold the trade, target buy side liquidity, price pops. Another opportunity comes in. We said you're either going to use FVGs and order blocks, whereby this is an order block, then it closed. So this is an order block. Just one last time to just make that clear. This is an order block. Then we have a situation of confirming an order block means you need to close above the high, right? That's how you confirm an order block to be valid. We need this next second candle to close above the high, like this, not just leaving a week. That is not a valid order block. Price will always take you out. Reason being, this can signify a sweep of liquidity, and a sweep of liquidity can signify a reversal. So when price comes and then fails to close above a high, it shows there's no break of market structure in a lower time frame. So you want to make sure price is above the high, not below. So when price does the right thing like this, close above like this, then you want price to retest what? To retest the open. The same thing with this. It won't necessarily be one single candle. It can be series of candles, but finally they close above and then we test the open and buy. Same thing here. This candle, finally, we had this one big candle that closed above its high, so we retest the open to buy. For the fair value gap in particular, since this was in line with our current bias. So we have this situation. So let me make this a different color. So this is red, this is green. since I use green, and I do it specifically for psychology. To those who, when I began trading, I used to have that kind of FOMO. When I look at candles going against me, I want to see the same color. So I change the colors to green and black. Though I see also literally most ICT traders use it, but it's a psychological way of preventing you from getting fear words. But let me use red here. So green and black keep me neutral. I don't need to fear any compared to red and blue. Those colors are very bright. So price closes above this high with a body signifying a complete acceptance to go higher compared to closing below the wick. Then what do I want to do is I want to see price come back and react here on the open. I get a market structure shift on the 1 hour. Very simple. Very simple as it sounds, but then it doesn't mean that it will be very simple on the charts. You have to put in the work. Okay, so this is the open that you want price to react to. Now, when price is dropping here, what are you waiting for here on the lower time frame? Because this is a daily chart, this is a 1 hour chart showing slower time frame dropping. You're waiting for a market structure shift, as simple as that. A market structure shift is simply an indication that the zone that you're sitting on is a strong zone. Once there is no market structure shift, it signifies that there is a chance that price can continue to drop lower through that zone. But if price shifts for you from within this zone, from around here, then you can confirm that at least we are going to continue pushing to the upside. So that is the confirmation that you have for. So this was the first type of entries that you'll be looking for. What you'll be looking for is price reacting on order blocks, on FVGs to continue pushing price higher. So this is OB, right? So this is the OB entry. Now, when we talk about liquidity sweeps, what did we speak about? Liquidity sweeps are also going to be there. The markets won't only give you order blocks and fair value gaps every time. There are times whereby the trade is going to move because of liquidity. So how does liquidity entries look like? And how does it also react on the 1 hour? Same protocol. Just keep it simple. So this is a candle, daily candle. Okay. What happens is a daily candle comprises of a high and a low. So these highs and lows have liquidity. Up here we have buy side liquidity, down here we have sell side liquidity. So what does price do? Price uses sell side liquidity to pair orders and push to the upside, and price uses buy side liquidity to pair orders and go to the downside. So this is buy side liquidity. Then this is sell side liquidity. So buy side liquidity is up, sell side liquidity is down. So this is being used to buy price to the upside. This is being used to sell price to the downside. So how do we use it to our advantage as traders? Now, in this example, we used FVG and order block to buy. Now, let's look at that example in. Now here, let's take a look at this particular piece of price action. If I can replay it, we have scenarios here that are happening. Price continues pushing higher, pushing higher, pushing higher. Another logic that you put behind your mind as you're trading also is that whenever we see price overbuying like this, there is a likelihood that we're going to have at least a sell day coming in. Price won't continue just having buyers throughout. Okay, you may likely have, for example, here you have buys, 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 then a sell. Buys, 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 then we expect a sell. See that? So price will always have a mixture of buyers and sellers. Buys, buys, sell, like that. Buys, buys, sell. Buys, sell. Buy, sell, sell, buy, like that. So that's how price will keep moving. When you see explosive moves off a strong zone like this, you want to see some price come back to a strong zone. It can be coming back to an order block, can be coming back to an FVG, it can be coming back to a liquidity. So now, according to this price, we ask ourselves, which one do we expect price to come down to? Okay, so while this day closes, you mark this candle's low as your first interest. It also has a fair value gap. It also has a fair value gap here. Okay, so what do you have? We have sell side liquidity, sell side liquidity. Used for what? used for pushing you to the upside. Sell side liquidity. Sell side liquidity is used to buy, and buy side liquidity is used to sell. So this is a daily FVG, 1 day FVG, 1 day FVG. So 1 day FVG is also one of the things you mark because you do not know which one exactly will price use, right? How do you confirm a price will use this one? That is not going to be you to tell. It's going to be time and market structure shifting from which one. You get it? Eh? When we have a liquidity zone and a fair value gap zone, and you don't know which one price will use, or which will choose this one or choose this one, what do? You confirm it using a market structure shift. When price does not want to use this FVG or this liquidity zone, it will not give you a market structure shift zone. That's why the market structure shift is a very important criteria in a lower time frame. So if price wants to use this low, it will give you the shift, right? If it doesn't want to use this low, it will continue pushing lower. You won't see the shift in a lower time frame. You reach this zone, continue pushing lower, you won't see the shift in a lower time frame. You reach this low, it will continue pushing lower until it reaches here, then it will shift for you in a lower time frame. So for you, you want to do the patience game, which is mandatory of every trader to give you quality trades. So you're going to watch and see which one price will give you. So let's see. Now we don't have, of course, the subscription, so we want to see the 1 hour replay. We'll just open the daily. So what does price do? Now, number one, this is a logical approach. It's a cheat code I want to give you. One, whenever price still wants to continue going higher, extremely higher, it may not sweep this high. See this high here? If you don't understand it, just ignore this part because it's a little detailed. When price wants to continue going higher, it is going to leave this high untaken to generate liquidity in form of buy side liquidity. It won't take it on this day. What it will do, it will leave it and call it a failure swing. In this point, it is engineering liquidity for the future. However, on other points, it can also take it, then drop lower, but it means to drop deeper because it has already paired liquidity up here. But then if it does not take this liquidity and we are still expecting to buy, it won't take the high, it will just drop slowly in a small, because it didn't take anything up here, it is just suspended on mere air. When price dips here, then now we start looking for the criteria at one. What is that criteria? The market structure shift on the 1 hour to confirm it, because we don't know if it is going to completely reverse from here. But the 1 hour market structure shift will give us the answer. So we go to the 1 hour and we confirm that by looking at how price reacts when it gets to this zone. So this is price for you. And as far as I remember, this was NFP. It was the first week of the month. Huh? No, it's not. This is not NFP. But this was a news candle. It's actually recent. I'm forgetting which news this was. But it was on Friday last week. So what happens? Let's go to the criteria we spoke about. When price fails to take this high we expect it to drop, then it does what? It takes this Wednesday low. You can clearly see this Wednesday low being taken from here. So if I can mark this Wednesday low clearly from here like this, you can see that price used sell side liquidity, which is Wednesday low, to pump to the upside. So what do we want next? Very simple criteria. The next criteria is confirm that price will use this low and not these lower lows by getting a market structure shift from this very zone. So price comes, weaks this zone, displaces, fails to create the shift, comes, finally starts to shift to the upside. Once it begins to shift to the upside, one of the criteria for seeing a shift, of course, with CISD is different from the what? It's different from how do they call it? SMC. But then I'll use the SMC for now because the one for IZ is kind of complex. CISD is almost the same as market structure shift, but they call it change instead of delivery. Now, change instead of delivery is not going to wait for example, this highs. It will just use PDRAs down here to buy price up. You see that? That's the good thing about it. I can take more pips from down compared to the person waiting for this shift. But I've already confirmed the strong zone. Okay, so what is the market structure shift here to confirm a price is on the upside? You can clearly see this is the high that created this low down here. Okay, or this, you can use this one because this one dipped here. So price closes above this. Let's use this is the most eminent week, so let's use this week because they're both down on the strong zone. So this is a market structure shift that is happening. Market structure shift on the 1 hour chart to give you clarity. The reason we prefer the 1 hour market structure shift is because the 1 hour is stronger than lower time frames. You can get a shift on the 1 minute, but it is too small to control higher time frames. So at least we need a sync in time frame alignment. So what happens when price finally reverses to the upside? What is the next criteria we spoke about? I can push this here to make it clear. I don't know if you can see this end. I hope you can see it. So what happens when price dips here? Price wanted to close above this high, right? So price moves, closes above this high. On closing above this high, what is your next thing in mind? To come back and react on an order block, a new order block for 1 hour. Then we can get maybe a lower time from like a 5 minute entry or something. Okay. So which is the order block here down at discount? We have this is order block here. See that? So this is the most eminent order block. And those who understand premium discount, we start that from this low to this high is our premium discount. If I'm to use fib tool, so this fib tool gives us, I don't know if you can see it, I don't think you can see it. Let me just use this to show you from here up to here. So if I'm to put some settings on this and I show you this line, then I try to this won't help. This is a gun box. The gun box has only one color. So I wanted to show you that we have the premium and discount, and then we prefer when price finishes the shift to come back to the discount for us to continue buying price to the upside. This, but you can still see it if I'm to just use this marcation. So we get this black, and then so as simple as so above this red line, what you can see above this red line is premium, below this red line is discount. So if price from this swing point, which is this low here, up to this high here, we mark this and this, then we put the gun box to show us the discount. So what does price do? Price drops finally back down to our order block. If we have a fair value gap here, we use the fair value gap, but here we have the order block. So price rallies up, finishes the shift, comes back down, and then drops back to the order block. See that? So on dropping into the order block, this is where you'll be looking for your entries from. It is also in the kill zone, which is at 9 a.m. For you to take the trade. So you hold the opportunity for the news off here. So even if news is there, as long as you're following structure, you'll always be on the right side of the market. The only issue with news is when it disrespects your structure, it means it's doing a manipulation, which is allowed. Manipulation, of course, happens with dips. So the only thing is just to risk less and make sure you're very smart with it. Manipulations for news are allowed actually under CFTC level, or IMF, that is the International Monetary Fund, or CFTC, that's of course the Commodity Futures Trading Commission. We are allowed to make those manipulations small so that they can generate profits during an immediate move. So you see how you benefit from this? As simple as following one, just do the same thing. That's what the smartest people in the world do. They repeat the same things contemporaneously. You don't need to trade every piece of price action, but focus on quality. So what do? We look at the 1 day. What are we looking for on the 1 day? We're looking for order blocks or daily order blocks, daily FVGs to hold price. Then after that, what do we go to? go to the 1 hour. What do we look for in the 1 hour? We are looking for market structure shift in the 1 hour. And then, like for example, we are looking for also those PDRAs in form of order blocks or fair value gaps for you to take entries. Now, those who prefer to use the 5-minute chart, I can also show you, though to me it's almost the same, and it also makes you focus on quality than noise, unless you're really going to do enough precision, which is also okay. It's very okay. So if we are to those who want to use the 5-minute chart to see the entry, the 5-minute entry will be literally there. So what you will see is what does price do? Price comes and then reacts on this zone, but then here you will need to take an aggressive entry whether you want it or not. I think you can see it with your eyes. Since we have news, it did not give you room for you to get a shift, the retest and all that. Nah, it don't give you much room. However, there is an entry here if in case you're critical enough. So I can delete this. When price hit this line here is the 1 hour order block, right? So when price hit the 1 hour order block, sorry, the daily order block, should be right, yes. It's the 1 hour order block, sorry, because we're moving from the daily, the 1 hour, then the 5-minute. So what are we looking for here? We're looking for a shift. Now, the shift here is not very clear on the 5-minute. Maybe you will have to go to the lower time frame, like maybe 3 minutes, if you're to use that procedure of the market structure shift, you will have to reduce your time frame further. So here at least we can see something like a shift on this zone. So price comes, drops, creates a new high. So this high creates a new low, and this low creates a new high, right? So this becomes your market structure shift here. That is if you're not going down to smaller time frames, market structure shift. So price finally gives you a market structure shift here. And then what do you want price to do? Price to come back and then give you a re-entry, an entry from here, right? So the very first PD array here is an order block. There is no fair value gap I see here. So it means that there's no fair value gap. So the likely entry is going to be this order block. So when price closes above this high, you put your entry here and your stop loss below that low as you wait for news to come and then deliver. So that is a 5-minute entry from here, and then you put your stop loss around 5 pips, okay, for those who want to use those 5-minute entries, and then you put your risk reward, of course, will be because we have news. So target post the most prominent first, partials here on the most prominent high, and then more highs and more highs and more highs for you to continue delivering price with the news consistently higher like that. Okay, so what are we doing? We're moving from the daily to see a strong zone. We're coming to the 1 hour to see when price reacts on that daily zone. Has it given a market structure shift to confirm that price is moving in sync with that strong zones holding the price? Okay, then when the market structure shift is complete, you want price to come back and react on a PD array. Can be a fair value gap on that particular time frame, that is 1 hour or 5 minutes, and then we will deliver price to the next buy side liquidity or sell side liquidity consistently like that. So that is how you'll be able to benefit from those price actions in the most simple of ways possible. Okay, so now after price pushes to the upside, now we have another opportunity here. Now someone may ask me, how would you trade from this particular zone? First and foremost, when I'm teaching most of my students, I focus on quality, because trust me, you can make 3 trades a week and then you bag, compared to having a number of trades and then you find yourself on the wrong side of the market. And that's what most gurus don't speak about, is that you want to focus on quality. When price is pushing to the upside and has been in a very bullish market, there are likelihoods of false reversals happening. So you want to focus on trading what is making more sense, okay? So what happens when price is down here? Okay, you can clearly see that we have targets, right? Targets high, highs, 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 highs. So it makes sense for you to continue buying higher. When price reaches strong highs like this, there is a likelihood of a reversal coming back into the range compared to going higher. So usually if you want to trade these points, strong points, it needs professional thought, of course, but then you can take the risk, of course. So what you do is you look on the left and see where price has swept liquidity the most. So price sweeps liquidity up here. Yes, it swept liquidity here, but you can see it also made that little bit of faking. That's why swing points are not very good. It's the same as trading tops and bottoms. You're not sure if price is going to continue weakening through. So price does this, comes back, then buys. So now let me take you back to the context that I brought you that I told you about that helps you understand when price will drop further low. We spoke of when price closes like this and price takes this high, it is likely to drop deeper, right? However, if price wants to reverse and price does not take this high, it is likely to come back higher because there's engineered liquidity and price has to sweep liquidity. Now let's look at the context here. You see the difference? Price has a high and the next candle first took the high then dropped low. That is a significant sign of a possible drop further. You can see this, we swept the high, but then this, we did not sweep the high. So it means that liquidity kept on existing here, but here liquidity was swept. So now you'd ask me, how would we trade since price has swept liquidity? We say when price sweeps buy side liquidity and we have already hit a strong zone or we're in a premium price, we can look for sell. So this is buy side liquidity. So buy side liquidity is going to be something like this. So we are looking at this particular day, isn't it? So when price comes, was the price closed here, tapped, then dropped. So next time we shall talk about a very interesting part that is to do with the Asian session. The Asian session solves for you the mystery for the whole day. As long as you've known what the Asian session has done, it will give you a clue of how the whole day will go. So all you do is you add Asian session plus your PDRA to tell you which is going to happen. When Asian session does certain things, expect London to do certain things. You don't expect them to do the same thing. So it gives you clue not to do. So if you go to the 1 hour and then we see what exactly happened here, you realize that if I pull this back here and then I pull this back here, you realize that a shift happened here. Okay, and a very good trade took place here. So price took previous day's high, which is this, from this particular day. You can use this tool to delineate here. So what did Asian session do as I spoke about? Asian session is one which came and took this high. So one of the protocols of Asian session is if Asian session engages or sweeps liquidity over higher time frame zone, expect London to expand away from that zone. That is just one of the tips I'm giving you for it here. When price sweeps liquidity in Asia, when price sweeps liquidity or hits, if price hits a strong zone in Asia, don't expect London to come back to that strong zone. Expect it to move away from that zone. So Asia swept the liquidity, and what happened? A shift happened. To those who can clearly see the shift, this low created this high. You see, but then me, I don't use those. I don't use the SMC market structure. I use the ICT-CISD, and that involves PDRA. So I look at order blocks, fair value gaps that are here. But let's just make, because it's the same concept. So this is the shift. Market structure shift happened here in the 1 hour. That is the market structure shift. When the market structure shift happened to the bottom, and then we ask ourselves, we want to take the trade outside, right, at 2. So at London time. London time in Uganda is 9 a.m. In New York it's 3. So when it clocks, sorry, in New York it's 2. When it clocks 2 a.m. in New York, in Uganda it's 9. I'm looking for opportunities where on the PDRA is the same schematic. When price reacts here, it's the same as the market structure shift, right? Low, high, with sides to price decides to start dropping lower. I hope you can see me clearly. So price reacts here and then we can start shorting this price lower from here. Same schematic, very simple procedures that just need discipline. So we hit a higher time frames daily zone that is sweeping liquidity. We go to the 1 hour chart, wait for a market structure shift away from that strong zone or sweep of liquidity. Wait for a retracement into a PD array in form of an order block or fair value gap in the kill zone, and then you TP, you drop. I always use 1 to 3, 1 to 4 risk reward. So I will be comfortable taking my profits from around 30 pips for that particular day from here. And I'm risking about 10. Like that. That is how I take the trades continuously. So the same thing is going to happen here. The same thing will happen everywhere else as long as you're following that same protocol. Okay, so I don't really know if anyone has a question, but we have reached our time. It's 9 p.m. Uh, okay, well, uh, thank you so very much for participating on this journey. And I hope you have picked one or two from here until we meet next Thursday. Then we shall go deeper into how to see these different things play out. But you can backtest this and you'll be able to see very good results from them. I wish you a blessed weekend and a nice trading journey. Bye bye.